Good. So, good morning, good afternoon, good evening, everybody. Welcome to this week's review for the 21st to 25th of August 2023 with Great White FX. So, as always, we're going to start with our economic calendar. So, looking at the economic calendar, we have some high impact news, but normally what bothers the most news I'm most often concerned with is either rate news or PPI or something of that nature. Though we have some high impact news on Euro for Wednesday, GBP2 on Wednesday, then Euro dollar on Wednesday, then dollar on Friday. But that's just about it. So next week will just be moderately calm. So let's get down to what we have going into the new week. So going into the new week, as always, we're going to start with NASDAQ. So first, that's US 100. US 100. So looking at the US 100, medium to short term, the other flow is down. Medium to short term, the other flow is down. If we look at it, even on the 1 hour, the other flow is still down. So let's get down to our candle so that we can properly break down this chart and see what we have on the chart. So looking at the US 100 from, we've had 3 straight weeks of down move into this weekly fair value gap here. If we go into the daily, you can see that this low has been taken out by price, and price just came briefly below this daily fair value gap. But if you look at Friday's close was closed back into the range of Friday. Closed back into the range of Friday. So if we go into the 4-hour time frame, going into this new week, there's a possibility we're going to see a retracement. And the retracement might be a little bit deep. We're going to see a retracement going into this new week. So this is the previous week's high. This is the previous week's low. So these are our dealing range. So if we're looking at this now, if price starts off straight without taking this low, then that means we might see a retracement into this high. But if price does something like this, then we might see a very steeper retracement. This pair is still down, but we might see a steep retracement before a continuation back to a downside. So that's what we have for US 100 going into the new week. Because if we look at it on the 1 hour, it's still down. So we might see a bit of a retracement. On the 1 hour, this will be your first dealing range on the 1 hour. That's this point to this point. So we expect a retracement probably into this area or maybe sweep this high. Then a continuation down. And if it will continue down, I expect it to sweep this fair value gap. This is where we'll be expecting it to come to. So the next one we're going to be looking at is the dollar index. The dollar index is still bullish, but the deal with the dollar index is pricing close above 103.57. That's not a good sign because it just shows that they've swept this high for liquidity, and we might see a bit of a retracement. So if we're looking at that retracement, as long as price stays above 102.55, this fair value gap here, that's this lower point, price must not close below it. This pair will still continue to the upside. But going into the new week, we might see a bit of a retracement or a consolidation. The 4-hour highs are still low. So if this is a retrace, we might see it sweep either of these levels. Because the next fair value gap on the 4-hour is coming in here. So what will likely tell you that the move has started is if you see a close on the 4-hour below any of these levels. If this first, then you see something like this. But if price sweeps these two straight, then you expect a retracement and then price will come down to this point. So that's what we're expecting going into the new week. This pair is still bullish, but we might see a bit of a retracement before a continuation to the upside. Next we're going to be looking at is the EURUSD. The same thing too with the EURUSD. This pair is still bearish. It's still bearish. Let's look at it from the weekly. If you look at it from the weekly, it's still bearish. Major moves to the downside. I'm going to remove all this. Still moving down, sitting above all these highs on the weekly. If we look at it on the daily, you can see that it just came, stopped at the rejection block here before this low and has moved back up. So going into the new week, there's a possibility we are going to see a retracement on this pair. And the retracement on this pair must not go above 109.41. That's like your line in the sand. Once they go above 109.49, then that means price might continue back higher. But as long as the retracement on price stays below this level, then you might see price sweep this low. That's 1.0833, because that's still the target for this down move. So the possibility exists that price may sweep these equal highs here. There are equal highs here. Let me go back to the 4-hour. It's clearer on the 4-hour. Let me annotate it here. This equal highs on the 4-hour. I might say these equal highs. Price may come to sweep it for liquidity to move lower. So these equal highs or this level here, either of it, then we might see a continuation back to the downside on price. GBPUSD. GBPUSD is slightly stronger than EURUSD. So looking at this pair from the weekly, if you look at it from the weekly, you'll notice that last week, what price did was that it first went down, swept the previous week's low, and rallied back into the range. That's this swing low here. First tapped into it, then rallied back. So if we're looking at this pair too might range a bit. There's a possibility this pair too, we might see a bit of a range, as we can already see on the 4-hour time frame. It's just ranging. So for this pair, if the dollar index is to drop, then this pair might rally. And if it rallies, you'll be watching this 4-hour fair value gap. You'll be watching this 4-hour fair value gap and this high here. So that's it for the GBPUSD. So the next pair we're going to be looking at is gold. Gold is still down. Gold is still down. Order flow on this pair is still to the downside. Price has taken out 1893. It's taken out 1893. You can see 3 weeks of continuous down movement. So whenever price takes a major low like this, you are going to expect a retracement. Most likely you're going to expect a retracement. So going into that, we are going to look at the daily time frame. So we're going to expect a retracement on this pair going into the new week. And the retracement, there's basically no solid fair value gap that all the price has been efficiently delivered. There's no open fair value gap. Let's go to the 4-hour time frame to look at what gold has to offer. If we find any 4-hour open fair value unmitigated, price was efficiently delivered. So this retracement, we might expect price to, we have liquidity here, we have liquidity here, and we have, so any of these areas, price might basically try to retrace to it. So best case scenario, this is what you're going to do. Best case scenario, you pick your fib from the previous week's high. Already we have a fair value gap on the weekly. from this high to this low, you drop to your 4-hour time frame. Then you drop to your 4-hour time frame. If we notice, there is a bearish order block here, and it lines up with the 62%. So if you're hoping to continue with the downtrend, this is where you'll be looking for a short. That's between 1900 to 1904. But it doesn't mean you can't take a long position. Well, if you're going to take a long position, you just need to be careful. You need to see a proper shift in market structure on the 1 hour before you move to the upside to join the retracement to either sweep 1903 or 1907. But order flow on this pair for now is still to the downside. It's still basically to the downside. Even on the 1 hour, price has been efficiently delivered. There's no open fair value gap. Basically, although price didn't close above most of them. So going into this new week, the possibility is that price may start trying to close. We have this here, this fair value gap, price didn't close above it. This fair value gap, price didn't close above it. So we might see price try to run up to any of these levels before continuing back to the downside on gold. So the next one we're going to be looking at is EURGBP. EURGBP, this pair for now is tilted to the downside to a medium-term consolidation. It's tilted to the downside to a medium-term consolidation. Let's go to the daily. If we look at it on the daily, you can see that there's a fair bullish order block here. This last down candle before this up move. There's a bullish fair value gap here, and that's where price is. And this short-term low here has been swept by price. So with this knowledge, if we go into the 4-hour time frame, we might expect a bit of a retracement. Probably into this point here first, because there's a daily fair value gap here. Into this fair value gap here. If price doesn't close above this on a daily basis, then we might see price gone for 85.04. This pair, going into the new week, any rally on it should be an opportunity for a short, provided price does not give a bullish formation. Price does not give a bullish formation, because we already have a swing low here. We have a high, we have a low, we have equal highs here. So if we get something like this going into the new week, it close above here, then we might see something like this. But I would prefer price not to sweep this low first. This low has to be kept in time, so that if it rallies, then it will drop back down to this low. But should price do something like this, then you're going to see, then this will be the drop. This is where it will be forming the high of the week. That's for EURGBP. The next pair we're going to be looking at is GBPCHF. GBPCHF price seems to have broken out of its range. Let's look at it from the daily. This fair value gap, and has closed above it. So going into the new week on this pair, any retracement on it will most likely serve as an opportunity for a long. So we have this 4-hour fair value gap here that should act as support. That's between this point to this point. If it fails, then price is going to sweep these equal lows and then probably head up into this area here. Into this area here, or this weekly fair value gap. Because if you notice on the 4-hour, price has closed above 1.1235. So it might retrace a bit for a continuation back to the upside. That's for the GBPCHF. The next pair we're going to be looking at is the pound yen. The pound yen price ran into a fair, let me go to the weekly. It is going to be clearer on the weekly. So these equal highs was swept by price. Let me pull back my annotations. That's this equal highs here. That's at 1831, 186.31. You see price swept it, didn't close above it and retraced and pulled back. This fair value gap didn't hold price. So if we're going into the new week, you can see that price is already retracing into this area. If price gets rejected from this fair value gap, drawn liquidity is going to be this 4 hour. This daily fair value gap here. Let's go back to the daily. This imbalance here. So what you'll be expecting is for price if price goes above here, you still have this 4 hour fair value gap to reject price and this bearish order block here. So you'll be expecting something like this. Then into this area, going into the new week for pound yen. Still bullish, but we are in a retracement. We might see a retracement going into the new week before a continuation to the upside. Then the next pair is the euro yen. The euro yen, you can see clearly on the 4 hour. We have a break here. We have a high, low, higher high. Price couldn't make a new high and drop. So for this pair, just wait for a retracement into this point here. And if that happens, then expect price to come down into this area here, into this 4 hour fair value gap. So any questions? Any questions?
None from me.
NZDUSD.
Great point.
Ma?
NZDUSD.
I want to ask, it's not, I want to ask a general question. It's about this fair value gap.
Yes.
When do you consider fair value gap close? Is it when it has a body close or a
Body
weak
close? No. Weak close is still active.
Okay.
When it has a
Because
weak close, it's still very, very active. But once you have a body close below that fair value gap depends on, you see, like in this situation now, you see the way price, let me go to Euro USD. You see it clearly. Let me just do small lecture now. Let me go to Euro USD so I can explain it to you. Now, if you go to the Euro USD, go to the weekly. Now, this fair value gap here. Let me hide all my annotation. No, hide drawings. Now, you see this fair value gap here on the weekly. You see the way price was not closing above it. The bodies were respecting it. Do you see it? Do you see it now? When they close above it, most often if it comes back, it's going to act as support. Do you see it here? Came back close to it, is going to act as support, especially when that fair value gap caps price for a very long time. You know, this is the weekly time frame. They refuse to close above it. But when they finally did, it's going to act as a sort of support if price comes down to it. Price came down briefly. Let me see if I can put my annotations. Do you see it? Came down very, very close. They didn't even allow me to touch it. You see it twice. Do you see it? Now, when they now finally close back below it, it's going to act as what you call an inversion. Do you get me?
What?
An inversion fair value gap. Now,
I thought when there's a close in the fair value gap, it is no longer valid again.
No. Don't make that mistake. Now, you see when price closed on the daily. Now let's go back. You see when price now finally started closing back here. Do you see the way they touched this high? It got rejected. Then they now close back below it. For this move to continue bearish, it must not close above this fair value gap.
We must not close
above it.
Okay, because I keep wondering why this fair value gap, even despite the fact they've been closed, is still showing. So that's I keep wondering why they are still showing.
It's still, no, on this indicator shows it.
Yes, that's what I'm saying.
For reference point, it doesn't, my own is not set to remove it. You can set it to remove it. Why? Let me see if I can do something here. No, it's not on this. I'm coming. There's something I want to do. Let me see if I can find something. Ah, where did I do that? No, it's not here. Okay, here. Now, let me show you something. When you have fair value gap matching like this, that area most times can give you a little bit of a challenge. That's why I keep it. Now, let's look at what do we have here. You have this, you have this. You see the way price bounced when it came into this area. It bounced, then ran up here, got rejected. You get, so the bottom line is this. If you have a breaking structure here, you ask yourself, this is swing high, this is swing low. Now, this is your dealing range. Where is the fair value gap from here to here? That's where you now start targeting. Do you get? Now, look at this here. Sometimes it doesn't work 100% of the time. Now, why is this place important? One candle down, one candle up. Do you see the way price was playing around it? Now, price has gone above it. What is that place acting as? A kind of support. That's why I leave it. So they now know that if this is to retrace a bit higher, they must not lose this support. So based on that, we know that the next place they'll most likely go to is where? This place. Isn't that making sense? So you don't throw away your fair value gap, especially fair value gap on 4 hour, 1 hour, 1 hour, if it is balanced, that's side by side, like here. If you have it side by side here, it's very important to pay attention to that fair value gap. You get, so, but now you can see the way price is sitting. They are not closing below it because they know what is involved. You see one candle. So doesn't mean that this cannot go down here. It can, but they know that if they close below here, this is going to serve as this and push price down.
Okay.
Isn't that making sense?
Yes.
So somebody was asking for a pair. Somebody was asking for a pair.
NZDUSD.
NZDUSD. NZDUSD. NZDUSD. Kind of spare. This pair is still to the downside. It's still to the downside. Let me go to the daily time frame. Look at the weekly. Has it hit any major levels? This pair is still tilted to the downside. It's still tilted slightly to the downside. You might see a bit of a retracement. You might see a bit of a swing low. It's close with, so you might see a bit of a retracement. Whenever a major swing low is broken, you're going to see a retracement. So this retracement, that's on the weekly. So if we now go down to the daily time frame, you look to your left, is there any structure? And if you look at it on the daily time frame, it's within another block, down candle before this up move. So you don't want to be taking a short here. And if you look at this, let me go back to the weekly. Where's the weekly dealing range? That's this point to this point. Go back to the daily. Have equal highs here. The possibility that this pair may come up to this place is pretty high. Remember what I said on the dollar index? Dollar index might most likely retrace going into this week. And if that is going to happen, this pair may rally. Not rally as in bullish, but it's going to retrace. So that will be short-term bullish run on the NZDUSD. Any other question? Or is there anybody who want me to look at? Remember, you were the one that asked for BTC USD, right? Hello, can you guys still hear me?
Yes, I can hear you.
Mr. Gibbs, you were the one that asked for BTC USD the last time.
Yeah, that was like the last 2 weeks or so.
What did I tell you about BTC?
You said it is going down.
And that was the move. That was the move. I told you he's not going to go. Now he has swept this low. So what do you expect? You're going to expect a retracement back into this range. And if it doesn't close above this range, then you're going to see it come down here. There's a breakout from the weekly. Let me look at this. It seems there's a breakout from the weekly. So going into this new week is going to rally. You're going to see a rally on this pair, probably into this point first. So if you look at this on the 1 hour time frame, you already see there's a range candle here. So once he breaks out of this range, what you do is you calculate this range high to range low. This point like this, you project it. Once he breaks out of it, you project it. That shows you how high he might go. That's maybe midpoint or something like that. So if he breaks out of this range, this is how high you'll expect price to go. So that does it. Any other question? Any other question? So in the absence of any other question, I wish everybody a beautiful night's sleep and a wonderful weekend and a blessed trading week ahead. Good night, everybody.
Thank you.